Hi, everyone. It's Billy Abrams with AD Mortgage and ADM Securities. We're about 15 minutes out of the FOMC meeting where the Fed announced they would raise their benchmark rate 25 basis points to 5.25. And for the first time since they began raising rates in March of last year, they signaled that they would pause. During a digest I did with Alex in late January, and I think at the webinar we did a week before, I had said that the Fed would likely set rates at 5% in March, and then either from there or 5.25 in May, they would likely pause. That's not an I told you so. It's rather to point out that not only was this move anticipated today, but it's made sense for a long time. I'm not an economist or am I a Fed expert, but after 14 months of rate hikes totaling 525 basis points, with inflation well below the highs it recorded last summer, and with the last two FOMC statements having acknowledged that the Fed knew that the impact that rate hikes would have on inflation would be a lagging one, they needed to pick a time and place to wait and see if they had done enough. And a year to 14 months and 500 to 525 basis points seems to be that spot. I want to read excerpts from the statement they published on March 22nd, the date of the last rate hike, and today, to illustrate how they parse their words to effectively say just enough to get their point across without putting themselves in a box. On March 22nd, they said the committee anticipates some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive. Today, they said the committee will closely monitor incoming information and assess the implications for monetary policy in determining the extent to which additional policy firming may be appropriate. It's a subtle change, but it's clear what they're saying. Before they anticipated further rate hikes, now they don't. The Fed has two mandates. One is to control prices, inflation. The other is to minimize unemployment. On Friday, we'll get the latest non-farm payroll numbers from the Bureau of Labor Statistics, and expectations are for 180,000, which, if correct, would be the lowest number since February of 2021. This morning, the ADP reported that their nearly equivalent number was nearly 300,000. And if Friday's number looks anything like that, the Fed may already be in a box. But we'll wait and see how that works out. On March 22nd, the date of the last rate hike, the 5-year closed at 3.57. 2 days later, it printed 3.25. From there, it went back to 3.75. And just yesterday, it was back at 3.57, as if nothing had happened since the last meeting. Before the news today, it had gotten down to 3.39. Just after the news, it traded to 3.36, and it went right back up to 3.39. There's one last thing I want to address, which could be impacting the Fed, and that is that the Treasury Secretary Yellen told us early this week that by early June, the U.S. would hit their debt ceiling if Congress does not increase it. We've been down this road before, many times in fact, and at the last minute or even later, a deal would get struck. But the divisiveness in Washington gets worse with each Congress, and I don't think anything is a certainty with this one. Most experts think that a failure to increase the debt ceiling would result in sharply higher unemployment and a bad recession, along with a downgrading of U.S. debt. A recession would typically result in lower interest rates, but a downgrade certainly wouldn't. And with the 5-year trading more than 100 basis points below where it had traded just 6 months ago, Treasuries could be vulnerable in here. The Fed is clearly willing to risk a shallow recession and some increase in unemployment. They've stated that, but not extremes in either. This will all come to a head in the next month. And while I like the markets technically and think yields could go lower, I wouldn't be shocked to see the 5-year in somewhere in the same range of 3.25 to 3.75 until this debt ceiling issue gets worked out. With that, I'll leave you. I'll say everybody have a great day and look forward to doing this again down the road. Thank you.